Welcome! Today we are exploring the transformative role of blockchain technology in trade finance, focusing on both the opportunities and challenges. Trade finance is an industry often bogged down by paper documents and legacy processes. Blockchain is here to change that, offering a secure and tamper-proof system for recording transactions. This innovative method increases integrity and security by ensuring that records cannot be modified after being added to the chain, addressing major pain points in the industry. Traditional trade finance systems are slow, lack transparency, and are vulnerable to fraud, highlighting a pressing need for digital transformation. By the end of this video, you'll gain a comprehensive understanding of blockchain's role in modern trade finance, from its fundamental components to practical applications and future implications. First, we'll define blockchain, then dive into the opportunities and challenges it presents, concluding with impactful real-world applications. So what exactly is blockchain, and how does it work? Blockchain is defined as a decentralized, distributed ledger that permanently records transactions. This structure prevents tampering and ensures the ledger's integrity. Two fundamental components are smart contracts, which automate agreements, and immutability, which ensures recorded transactions can never be changed, fostering trust. Despite the complexities, blockchain brings significant opportunities to trade finance. Let's look at the key benefits. Blockchain's core characteristics enable real-time tracking of transactions, significantly improving transparency and traceability, which reduces disputes and builds trust. Increased efficiency comes from automating operations with smart contracts, leading to faster transaction processing. Simultaneously, the decentralized nature enhances security by minimizing fraud risk. By digitizing documents and automating processes, organizations can drastically lower the operational costs and paperwork associated with traditional trade finance transactions. However, implementing blockchain is not without its hurdles. Understanding these challenges is key to successful adoption. Varying regulations across different jurisdictions complicate compliance for cross-border trade, posing a significant hurdle for widespread blockchain adoption. Integrating blockchain with existing legacy systems requires substantial investment and technical expertise, often creating complex integration issues for organizations. Many blockchain networks face scalability issues handling high transaction volumes. Furthermore, hesitation and a lack of awareness among stakeholders present significant adoption barriers. Several companies are already demonstrating blockchain's potential in trade finance. Let's look at two key case studies. The GSBN's EBL solution replaces traditional paper bills with secure electronic versions. This is widely adopted by major shipping lines and streamlines data sharing in global trade. Vanijja partnered with a multinational corporation to replace paper processes with secure digital documents. Their solution maintains legal integrity, reduces delays, and future-proofs trade finance in complex supply chains. What does the future hold for blockchain in global trade finance? The move toward digital transformation is accelerating. As regulations evolve and more stakeholders adopt this technology, we can anticipate blockchain becoming integral to future trade finance processes. By proactively addressing current roadblocks, the trade finance sector can leverage blockchain's immense opportunities to achieve greater operational efficiency, security, and transparency globally. Thank you for watching. If you found this video helpful, please like and subscribe for more content on the future of finance and technology. Let us know in the comments what you think the next big digital shift in trade finance will be.